Good morning, good afternoon, good evening, wherever you are in the world. We've got a special episode of LunarCrush Live. We were on Twitter Spaces earlier. We're going live earlier in the week. How are you even working on product stuff right now? I don't even know.
What do you think I'm doing right now? I'm doing wireframes. I'm doing PRDs. This is great.
Love it. So, a lot of you out there, if you even have a phone, you probably have heard about what has kind of transpired with Terra, with UST. We've basically touched on it on every live stream we've had, almost like every other meeting we've had, any sort of BD call that I've had, people have been talking about it. But we haven't really heard a lot of debrief. It's just a lot of opinions. I don't think there's been a lot of people that have gone deep on trying to kind of explain what's happening. I haven't even heard a lot of people explaining, what the mechanism was for, everything to basically stay stable. So I'm really excited today. We've got Henry Elder. He's here from Wave Financial, and he's going to kind of talk through a little bit about how his firm handled everything that went down. So we're really excited to have him on for this kind of midweek special show. So without further ado, I'm just going to bring Henry on up. Henry, my man, how are you?
Hey guys. Hey Joe. Hey John. How are you guys?
We're doing well, man. We're doing well.
Thanks for having me on.
Very good.
So I still want to do this because we do it no matter where whatever live stream we have. Where are you in the world and what's it like there?
I'm in Los Angeles. It is really nice today. It is a beautiful day. I'm really enjoying it. I was outside earlier today, just listening to the birds singing. It's nice to take a breath,
It's amazing. Yeah, we're down in Orange County. I actually had a friend say he's canceling his golf trip down to Orange County this weekend because it's going to be too cold, and they're going to go to Palm Springs or Vegas. So I was like, sweet, the courses will be open. And I'll be here in my office.
Yeah.
Well, amazing, man. So love to hear just a little bit about you, Wave Financial, what your role is there, and then we can get into all this craziness with Terra and UST.
Sure, definitely. So I run all the decentralized finance strategies at Wave Financial. And Wave Financial, we are a $1 billion+ asset manager. We focus specifically on cryptocurrencies. We're a registered investment advisor in the US. So we offer wealth and treasury management to high net worths and crypto corporates. So blockchain foundations. And we help them to manage their treasuries or their investment portfolios. And then we have a bunch of different funds as well, including a ADA yield fund that farms DeFi on Cardano. We have a stable asset yield fund, which is actually a stable coin yield fund, which is primarily on ETH. So we are a lot of the strategies that we employ use DeFi in one way or another. And it's become a more and more important piece of our firm over the past, 12 to 18 months as the space has matured.
You guys were even doing, not even advisor. I mean, you helped with the acquisition, I believe, of a Blockfolio with FTX. You guys have a lot of different. You have kind of a services aspect, as well as kind of a money management and treasury management aspect. It was just kind of getting introduced to Derek and the team not too long ago. I was really impressed with just. You guys were kind of going at it in the right way. It seemed like just kind of understanding what's going on and being deep into strategy and not just, kind of trying to look around and pick a couple of things. So I thought that was super cool.
Yeah.
And what, can you just talk real quick? I'm not sure if it's your expertise there, but the NFT fund and what's involved, what's all wrapped into that?
Yeah, definitely. I mean, Derek actually would probably be able to give you a deeper dive on the NFT fund, but so Les Borsay, who is our chief strategy officer, he comes from a very, arts creative background. He actually, he worked in the music industry, and he was one of the guys that actually brought the whole electronic music scene to the United States, back in the 90s, back when it was hardcore, warehouse raves and stuff before it blew up into EDC. So he has, that just amazing background where he can see the potential in art forms and how they're going to impact society on a larger scale, which is something that I completely lack. I think I've drawn one picture in my entire life and it was absolutely awful. So I just stick with, math and DeFi and stuff. But Les saw this whole NFT thing happening. And he basically said, we need to get ahead of this, and we need to provide a way for people to get exposure to NFTs, through us, through using our advisory capacity. And so we spun up the NFT fund. I think, don't quote me on this. Well, I guess this is live, so, but I think it was the first professional NFT fund to launch in the world. And that's been just a really cool project. And the guy who leads it with Les, John Caldwell, he goes by Veg Surfer, just like a brilliant NFT mind, and the whole team there is incredible.
That's so cool. Yeah. And it's I think it's been very difficult for people to understand value around that space a little bit, just because, they think it's about the art, when it's like, sure, it could be about the art, but it's really about the communities being built there and the value kind of built out of that, which, I think Bored Ape is proving in spades right now, which is really cool. So let's talk about Terra. I mean, do you want to maybe start a little bit about, what was UST, like what was Anchor Protocol, like how were these things supposed to kind of be balanced? And like where, like when you got first introduced to it and the firm saw it, why was it, what was so alluring about that? Because the crypto space, especially among a lot of the projects, I mean, this was like the darling of like the crypto folks that kind of knew their stuff. And so, it kind of got us all. And there's a lot of things that went into it, but I'd love to hear just kind of your guys' first impression and how it got started.
Yeah, definitely. The Terra blockchain itself, I think, was a very interesting project, right? It used a Cosmos, foundation, and it created this really easy to use, a very pleasant user experience for DeFi. And a lot of that was based on the fact that Terra had its own native stablecoin, which was Terra USD, otherwise known as UST, right? And having a native stablecoin basically made it almost reminded me of like the crypto capital markets in 2015, 2016, 2017, when if you were trading Bitcoin or even Ethereum in 16 and 17, like a lot of the time you were trading against USDT Tether. There weren't a lot of other stable coins. And so if you wanted to trade, you had one base pair asset that made it very easy to go from platform to platform and put on trading strategies. That's something that there's something to say about diversification. I think it's fantastic that we have so much competition between multiple different stable coins, but it does make it a little bit more difficult from a user experience perspective if you're farming, half a dozen different types of stable coins across dozens of different dApps. And with Terra, it was basically just UST. You would use UST for everything. And so like for Wave in particular, we did a lot of farming of stable coins on Ethereum, mainly using Curve and Convex, which is, a stable coin decentralized exchange on Ethereum, and then Convex is like an LP kind of reward booster that's built on top. But we're farming a mix of different stable coins, which means that if we have assets in a pool, the ratio of our exposure to those different assets is changing all the time, which for an institutional asset manager like us, that is a huge pain in the butt when it comes to reporting, right? Because we have to do very proper, very detailed reporting to all of our clients on a monthly basis. And our administrators and accountants were like pulling their hair out, trying to track the minuscule changes in the values of these different stable coins. And so for us, I had been using Anchor extensively since, about May 2021 when we had a crash back then. But understanding the underlying kind of stabilization mechanics there, we didn't really feel that it was at the size that we were comfortable allocating capital for clients until this year. Right. And once we started to do that, again, the simplicity of being able to just deposit assets into Anchor and just have them grow without us collecting yield, converting it back into other stable coins, calculating the different values, but simply just having one balance that just grows every day was incredible, again, from a user experience standpoint. Our clients loved it. We loved it because it was very predictable. But there was always the risk of that exposure to a algorithmically stabilized asset, which I'm sure we'll probably talk in more detail on a little later or next.
Yeah. No, I mean, we can keep building on it. I mean, I think, looking at some of the risk there, and, you see other competitors out there, from a centralized standpoint, someone like a BlockFi, and it's like, as a retail investor, you're kind of looking out there and saying, hey, I'm going to keep an eye on these yields, right? And when the market started to kind of come down a little bit, like last year, like you were saying, it's like, yeah, like yields started to kind of adjust down, and people just kind of keep an eye on that and see where it's at. It's like, hey, 6.2% is still better than what else I'm getting out in the market.
Right.
But with those, you never felt this almost like the depeg risk that was out there. And it's like, they kept saying, oh, well, the peg was not lost on the blockchain. Turns out that doesn't matter. When this asset's spread across 300-400 pairings, centralized exchanges, decentralized exchanges, it's almost like there was an overextension, too big, too fast, still kind of traditional market kind of aspect there. So like, what were you guys looking at? So it's like, it sounds like, hey, we're going to try some stuff out ourselves. Like, even maybe some of the people that work there saying like, hey, I found this thing. This is really cool. I've been testing it on my own. It makes sense. Hey, maybe we take some of like, operating whatnot to invest in that a little bit further. Then once it's clients that you're kind of getting involved, you probably put a set of controls in place that were much more rigorous than maybe it's like, you like with your own Terra Station wallet out there. So did you guys start to kind of put some of that stuff in place? And then, how did that kind of eventually lead down the path of where things were going? So like, kind of what were you, I would say, don't tell us exactly what you saw right now. Kind of tell us maybe what the lead up was over the last like 3 or 4 months and the way you guys were feeling about everything.
Definitely. So before we were comfortable allocating capital to UST and Anchor, we had to understand what was backing the peg, right? Like what kept this asset at $1. And one of our analysts, Sam, actually went like deep down this path and looked at all of the different mechanics that underlie a range of different stable coins, including UST. And we wrote a whole research paper around it. And we understood that, essentially a lot of people looked at UST and said, all right, well, it's backed by convertibility to Luna, right? You can always take one UST and you can burn it and mint $1 worth of Luna. And that is interesting, I think, from an algorithmic standpoint, but it has this inherent risk of something called a death spiral, which is where if people see that UST is depegging and those people are holding Luna, well, they're going to realize that the UST holders are going to burn their UST and mint Luna. So anybody who's currently holding Luna doesn't want to be holding it anymore. And they're going to start selling it into the market to get ahead of all the new Luna that's going to be minted once UST gets burned, right? Are you with me?
Yes, for sure.
So that organically would drive the price of Luna down at the exact same moment that a whole bunch of UST holders are going to be trying to mint new Luna, right? And as soon as they mint the new Luna, they're going to see that, oh, the price is going down, so I need to sell it immediately, which then creates this self-reinforcing spiral, the death spiral, right? And that is an issue that is inherent in any fully algorithmic stablecoin. And so what Terra started to do was they created an organization called the Luna Foundation Guard. And the goal of the Luna Foundation Guard, LFG, was to support the UST peg with other assets. They specifically wanted to use some of the hardest assets in the crypto world, which is typically thought of as Bitcoin. And so the Luna Foundation Guard started basically buying more and more Bitcoin in order to back UST. And we thought that was interesting because then it gave basically another sort of outlet for UST sell demand, right? Basically, instead of just having a death spiral that has no end, you would have something backstopping it in the form of this Bitcoin, right? The third thing, which became more and more important over the past 12 months, is a concept known as liquidity around the peg. So most people, when they are trying to trade in or out of a stable coin, they're not actually going to be going directly to the stablecoin's native stability mechanism. They're actually going to go to the curve pool that facilitates trading with that stablecoin. And because of the way that Curve is designed with something called a stable swap mechanic, if you have multiple assets, if you have assets in a pool, in a Curve trading pool, and those assets are pretty well correlated, the pool can absorb very large trades between those correlated assets without breaking the correlation. And so the larger the liquidity in that pool, the larger of trades that pool can absorb. And so the UST wormhole pool, and UST wormhole is like a form of UST that's bridged to Ethereum. The UST wormhole pool on Curve became one of the largest stablecoin pools. And it provided about $1.5 billion of liquidity around that peg. And basically, you could look at that as like the first line of defense, a pool that could absorb about $700 to $800 million of sales into that pool before you start to see, significant deviation of the peg, right? Let's say more than 3 cents, 2 to 3 cents, which, for a pegged asset in traditional finance would already be significant deviation.
Yeah, nightmare.
Like we work in crypto, right? Like we deal with a lot of volatility. So that first line of defense, and then Bitcoin as the second line of defense, and then convertibility to Luna as the third line of defense, basically gave us the confidence that, okay, there are several triggers here that we can watch, right? And if we keep a close eye on these, then we can allocate capital here and basically say, all right, once certain triggers get hit, we will pull that exposure, right? There's actually a fourth one, which I haven't discussed yet, which is Anchor itself. So Anchor typically had about 70 to 80% of all UST deposited into it, right? And Anchor was essentially like the bank of Terra.
Yeah.
You would deposit UST, they would give you a fixed return on it. And the primary sort of, driver of a peg for any stable coin, regardless of what the underlying mechanic is, the primary driver of keeping it at or above $1 is demand for the stable coin, right? As long as people are going to buy that stable coin and hold it and use it, then it's going to stay at $1 or above, right? You don't need to worry about all of the first line, second line, third line stuff. Those only become an issue once demand drops off. And Anchor was a huge driver of demand because you could just mint as you could get as much UST as you wanted, deposit it all into Anchor, and you would always get that 19.5 to 20% yield. Whereas if you're farming Curve and Convex and you dump, $100 million into a pool, you're going to drive the yield down, right?
Right.
So if you want to be investing in size, then it makes a lot of sense to be using Anchor and Terra. And that's what we saw is huge deposits and TVL on Anchor just skyrocketing all the time. And this drove a ton of demand, but it was kind of circular. And that 19.5% yield was actually subsidized by Terra itself with a yield reserve fund.
Right.
And so they basically kept topping up this yield reserve fund so that they could keep this 20% yield so that people would keep buying UST and depositing it into Anchor. So now we have a bunch of metrics, right? We have a bunch of things that we can watch. All of this is very public. All of this is very much on chain. So what we said is we wanted to see, all right, what is demand for UST? As long as demand is going up, there's really not a lot that we need to worry about. But once it starts flattening out, then we need to start keeping an eye on Anchor deposits. As long as the Anchor deposits continue to go up or are stable, we're still okay. But once those deposits start to go down, then that's a problem, right? So then if that happens, the next thing is look at the Curve pool, because that's the first line, right? So if the Curve pool, which should be 50% UST and 50% 3CRV, which is like a mix of other stable coins, If those ratios start to get out of balance, where there's more UST and less of the other ones, then that's a problem, right? And then the next thing to look at, I mean, at that point for us, if all of those had tripped, UST demand was no longer rising, anchor deposits were falling, and the curve pool was getting imbalanced, we were already probably going to be pulling out.
Right.
But somebody who might be a little bit happier taking the risk, right? You would want to look at, how much are depositors in the curve pool removing their liquidity, and then what is happening with the underlying Bitcoin, right? So is the Bitcoin price dropping because people are anticipating that Luna is going to start, is going to open up the window for people to convert basically sell UST for Bitcoin, and how much Bitcoin is left in that pool. And then, of course, the last line is what's happening to the Luna price. So probably a good time for me to just sort of run through that like fatal weekend when it first depegged, right?
Yeah. And I mean, just to clarify, that curve pool was a wrapped wormhole UST, right? So it was ERC20 UST.
Correct.
There was, and I don't know if it's like, I noticed that bridging assets from Terra back over to Ethereum, at one point, was there a swap in that wrapped token? Like not that long ago, where it was like it was a wrapped UST, but then it was like a wormhole UST. Did they swap that or make a bridge change at some point there? And but like bifurcating those assets, did it have anything to do with the like lower liquidity for a certain amount of time, or?
Not really.
Okay.
So wrapped UST was basically what you would get if you used the native Terra bridge, which was the one that like Terra themselves had originally built.
Right.
Wormhole UST was what you would get from the wormhole bridge, which is like which bridge between Ethereum, Terra, and Solana originally, and I think they've added more. So that was a third-party project.
Gotcha. So maybe it was just Anchor offering. They were now offering to bridge over the wormhole version to ERC20 through their bridge.
So they deprecated the native Terra bridge, and so that pushed everybody to only use wormhole UST on Ethereum. But the UST wormhole pool was always the more liquid one. That one always had 1.3 to 1.5 billion of liquidity, versus the like native wrapped UST pool, which usually only had like, I don't know, $15 to $50 million.
Yeah. No, great clarification. Thank you.
Yeah. So basically what happened is, UST issuance and demand started to kind of flatline, and Anchor deposits also started to flatline a little bit. And this sort of fatal flaw was revealed in the Luna Foundation Guard's strategy, which is that the ideal way that they would have backed UST with Bitcoin is they would have used existing UST to buy Bitcoin, right? So then if you had, let's say, $10 billion of outstanding UST, and you used a portion of that to buy $1 billion of Bitcoin, then you're 10% collateralized, right? 1 billion in Bitcoin, 10 billion in UST. Instead, what the Luna Foundation Guard did is they minted new UST and then bought the Bitcoin with that. So now you had $11 billion of UST that was backed by $1 billion of Bitcoin. And the people who you bought the Bitcoin from were now going to have to sell that newly minted UST into the market, right?
Yep.
So this was not ideal, but it's the way that they did it anyways. And either way,
you foundation approval, like, did that have to go through the voting and the governance side of that?
That's actually a good question. I don't remember.
I was like, did UST compared to what Luna, like with that foundation, like is there a different mechanism where they could have just minted that? I'm wondering where that kind of hang up is, because you're right, like you're instantly, like creating inflation on it, and you're instantly like, wow.
Right. And that was what basically ended up being their downfall, because they did a 1.5 and they paid for it all with newly minted UST. And they bought it from a bunch of, big, like gigantic crypto funds and market makers. And those funds and market makers sold the UST over the course of, a period of time, a week or two. And they tried to do it relatively slowly so that they wouldn't impact the market. But Saturday, I guess that was the 7th. Yep. Saturday, May 7th. Somebody on Binance put in a little bit too large of an order, and they moved UST from $1 down to 99 cents, 99 and 3/4 of a cent, right? A 25 basis point displacement in the UST peg, which honestly is not typically that big of a deal. Like we see that kind of displacement on DAI or USDC or USDT or any stable coin on a pretty regular basis.
Yeah.
But there was so much sensitivity around UST at that point that when that was publicized, that it had basically moved 25 bips, some people started to get a little bit panicked. And, you know, I think this is one of the things this definitely is one of the things I love about working in DeFi is that everybody is like so passionate. And so the team that we've built at Wave is just like this is what we do all day, every day, right? Whether it's for work or not. And one of the analysts, a guy named Josh, he actually noticed this, and he was like, "Hey, there's some buzz in the markets about this DPEG in UST." And I looked at it and I was like, "Okay, 25 bips, like that doesn't really matter." But I should just run through that kind of, you know, mental checklist of how's Anchor doing, how's the curve pool doing. And so Josh was like, "Look, I'm here if you need me. I'm going to stick around for a couple hours just at my computer on a beautiful Saturday afternoon." You know, the dude really, he really sacrificed something there. And I appreciate him doing that. But he was like, "Look, I'll hang around. Let me know if you need anything." And so I checked Anchor, and my heart like dropped, because Anchor had gone from 14 billion in deposits to 13 billion in deposits in like a couple hours, right?
Wow.
Like $1 billion flowed out of that project almost immediately. And I was like, wow, that's really bad, because that's more money than that one withdrawal alone would wipe out the curve pool. So that like immediately destroys 2 layers of protection here. And so I hopped over to the curve pool to see like, were people already liquidating? And the curve pool was already moving out of balance. But even worse, someone had already withdrawn $300 million of liquidity from the curve pool. And that was when it was like every single alarm bell started ringing. And Josh and I and a couple other guys on the team, everybody just came online, and we just like ripped through every single like piece of UST exposure that we had. We bridged it over, we sold it, you know, we pulled it out of the curve pool, whatever. And we were able to move out of all of those positions within, I think it was within like a 30 to 60 minute time span.
That's really fast, considering like that could be one move over a bridge. You know, obviously it's most of the time faster than that, but knowing that everyone was starting to get on top of it, being able to liquidate that quickly is pretty impressive. And I mean, like you were saying, 25 bips, not a lot, like, you know, but when you're looking at which exchange that happens on, if that's happening on the most liquid exchange out there too, you're kind of going like, someone went to the most liquid place to try and wipe that out as fast as possible, which it's interesting. Like, man, you're right. Striking that deal and having the market makers, which I'm sure it was all the big boys that we all know, and their positions are, you know, like they just don't hold it on the books, right? We'll do this deal for you, but this is coming off of the books, right? And so, you know, you think like, hey, like this is going to be a 3-month thing or a 2-month thing, or like them just, who knows if they even had like a time, you know, any sort of like time expiry there where they're like, hey, we're just dumping this stuff. It's like, that was the deal. That was the rub there.
Yeah.
I'm curious, like you said, there was $1 billion withdrawn. Like who has that kind of, like, I'd like to see that track, like that path, that history. Who has that kind of money? Who actually gets rid of $1 billion just like that? Is this a major exchange? Is this a Citadel that was initially accused? You know, any thoughts on that?
Yeah, it's a good question. I mean, you know, obviously we were a piece of that right behind it. I assume that, so somebody actually put together a list of like the 50 largest wallets that moved out of Anchor that day. And I think that they moved something like 2.5 or $3 billion in total. And we're on that list, but it's all like you can't tell who anybody is. But yeah, several people who probably had similar metrics in place that we did looked at all this stuff and were like, all right, I don't want to be in front of whatever tidal wave is coming, right? Like, I've enjoyed my 20% yield that I've gotten for the last 2, 6, 12 months. And now I'm just going to go risk off, which, that was exactly what our calculus was. So I certainly can't blame them. That said, in terms of the whole Citadel BlackRock thing, I don't put a ton of stock in that, just because like those are pretty heavily regulated entities. And I don't think that they are, just having experienced like a lot of the regulatory overhead that you have to deal with just to operate every single day in the crypto markets. Like, they would have to go through all of that just for this one trade. And I don't think that they are as significant of operators in the space on a day-to-day basis as people think. And so for Citadel to be like, hey, there's this opportunity on this platform using these currencies that we have zero experience with, like, we're going to put billions of dollars on the line here. I don't see that as being like a realistic risk that they would take. I think that there are plenty of other, if somebody did attack Luna, I think that there are plenty of other like well-capitalized crypto institutions that could have made that same trade and pulled it off, as well as it was pulled off. Now, that said, I also don't think that the Luna Foundation Guard needed a lot of help to fail here. So yeah. I think that they made a number of unforced errors that ultimately, really sort of reinforced their downfall.
I guess if you went back and you said, okay, out of those top 50 wallets, is there any way to look at those 50 wallets and the liquidity pulled on that pool, right? Because it's a very well-known tactic in the market making space that, less liquidity, a little bit more slippage, but a little bit more volatility in the price when you're trading on a less liquid pool. So I was like, that, I don't know if anyone's gone deep on that, but it's like, if those two, if anything could kind of be tied there, you can't, like, it's just, that's a thread that maybe you should follow a little bit. So
here's what I meant when I said, I don't think the Luna Foundation Guard needed a lot of help. My understanding is that like $250 million of that liquidity was the Luna Foundation Guard themselves, which removed the liquidity in advance of launching Fourpool, which was going to be like a new, very large liquidity pool on Curve. And so basically UST depegged slightly. The Luna Foundation Guard removed like hundreds of millions of dollars of liquidity from the Curve pool because they just weren't paying attention, I guess. And then a bunch of people started selling into the pool because that freaked them out because it coincided with this slight depeg. And then from my understanding, the Luna Foundation Guard never put that liquidity back. And like Jump Capital, for instance, stepped in and added $250 million they actually traded, right? They bought $250 million of UST from that pool and traded it for, I think, USD. But, with like that 250 missing from the LFG, I think it was very difficult for them to fully backstop. And even what Jump did, it did stop the bleeding for the rest of the weekend, right? Jump stepped in, a whole bunch of Twitter accounts were like, wow, like Jump has spent all this money. And the peg went back to just under 99 cents for, the next 36 hours. Where the peg just completely broke down was when the Luna Foundation Guard did what I think is probably one of the worst moves in like the history of finance, or at least modern finance. So let me take a step back and talk about, modern central banking, right? So the Federal Reserve, as a result of quantitative easing and keeping rates at basically 0% for such a long time, they needed to develop a new tool to influence the markets. And so they started focusing on something that they called forward guidance. And I think we're all familiar with that, because every time that the Federal Open Markets Committee meets and says, hey, we're going to raise rates, we're not going to raise rates, this is what we're thinking about doing, that's forward guidance, right? Them coming out and telling the market exactly how they view the future and what they want to do in the future. And the market takes comfort from that, right? The market responds immediately to what the FOMC says they're going to do, forward guidance. The LFG, the Luna Foundation Guard, essentially became the central bank of UST. They held the Bitcoin reserves, and they were the ones who issued forward guidance saying, hey, we're going to mint some UST, we're going to buy more BTC, right? In the midst of this whole meltdown, the Luna Foundation Guard came out and they gave forward guidance saying, we are going to buy $750 million of UST off of the market using our Bitcoin reserves, which is fantastic because the market was floundering because there was a lot of UST sell pressure and not enough buy demand. So $750 million was a good, floor to put in under there. You combine that with the 250 that came from Jump, and you've got $1 billion of buy pressure, at the drop of a hat. But they also came out in the exact same announcement and said that they were going to sell $750 million of UST in order to buy more Bitcoin. And I remember reading that and I was like, why would a central bank say that? The bottom is falling out of the market. All anybody wants to do right now is sell UST. Why would you mention, even give a hint that you're going to sell even more UST? And it was after that announcement that confidence just completely evaporated and the peg broke permanently. If I could equate it to like a traditional market analogy, it's like if the Federal Reserve came out and said, okay, we're in a recession, the Dow just dropped, 200 points, 500 points, whatever, right? Like everything is bleeding. Markets are down 20%. There's blood in the streets. We are going to start doing $50 billion of quantitative easing per month, right? We're going to be buying everything to raise prices. But we're also going to do $50 billion of quantitative tightening, and we're going to sell everything also for some reason.
It's like, we're going to do this overnight repo, and then in the morning, we're going to sell it. Like,
yeah, exactly. And it was like, what are you talking about? And they had a line in there. They were like, once market conditions, normalize. But it's like, it doesn't matter. Make that announcement.
So they came out and said they're going to buy, they're going to sell the 250 million in Bitcoin to buy. But did they say they're going to buy? They said they were going to buy UST with that.
So they basically said,
in the same tweet, they said we're also going to sell it.
Yes. So they said we're giving $750 million UST and $750 million of Bitcoin to market makers to go alternatively buy UST and sell UST.
They were basically thinking, hey, we're going to give them more firepower to market make. So they need both assets.
Exactly.
But what it turned out was, hey, like in the hands of those market makers, like they've just proved, they're not holding anything.
And there was only one market they needed to make. They just needed to buy UST. That was the only side of the market they needed to make.
You're not giving me a lot of confidence in UST2 that's about to, that everyone's like, rallying or like around right now. And it's like with something like this, it's, especially if it's just like all of these events coming together, there was no kind of like third party out there that was trying to make a move on what's going on. And I agree with you. I feel like it, the fact that, like, first off, how would they get all that capital into the market without anyone knowing, some of these other nefarious people that might be out there? It's, it's a stretch, but normally with stuff like this in our space or anywhere, it's like, hey, cooling period. Right? Like, let's go really debrief on what's happening. Like we're not even sure if we know what's happening yet. And they're like, hey, we're going to launch another one. And all the big exchanges are like, we're going to launch it again. Let's go. What's your thoughts on that?
I'm of two minds, right? So one is it's obviously not surprising at all. This is crypto, right? We move at the speed of light. And move fast, break things, and a lot of things have gotten broken. And there's definitely a lot of danger here that more stuff is going to get broken. On the flip side, a lot of people lost a lot of money. And if they can, if they can pull off Luna 2.0, like there's actually a potential for them to help people, right? Like I can see, like I can see both sides of it. And if you believe that there is some, altruism there, or, some innate goodness in people, then you can certainly believe that, Terraform Labs, the Luna Foundation Guard, and everybody else who was in that ecosystem is genuinely trying to restart the ecosystem without, the bad debt of UST and the old Luna, so that it can hopefully flourish again, and all the people who lost money on the first one can make money on the second one. But then on the flip side, it could just be, it could be the same idea, but could be motivated by more of a like, please don't sue us, because we tried again and tried to make you your money back. I don't know, man.
It's the fact that it's so fresh right there, and it's just like, we don't know, is kind of like the thing I'm looking for, because it's like, and the precedent that it sets of like, oh, you guys got rugged, like, we'll just start a new one.
Well, this is my question. This is my question. I mean, what do you guys think? Is this, Henry, you mentioned please don't sue us. Like, is this an experiment gone wrong, or was this an actual scam? Was this something that was planned out? Is Do Kwon to blame? Is anyone else to blame? Who's to blame?
Yeah, look, I definitely think it was an experiment gone wrong. I don't think that Terra and UST were the result of, a targeted scam. That said, I do think that the runaway success of UST went to, Do's head. He's 29, right? I mean, he's a young guy. It's easy to get carried away with when you see that kind of success. I mean, it was incredibly successful until it wasn't. And they were genuinely trying to shore up the mechanics, right? There was obviously, people said that there's the potential for a death spiral there, and they created the Luna Foundation Guard specifically to address that. But did they operate as efficiently and as optimally as they could have? No, definitely not. They clearly did not have the financial markets expertise that they needed in order to navigate something of this size. I think it basically outgrew them. I think it just outgrew them.
It's interesting. I'm going back to like when we had SJ Park on our stream about a year ago. I remember him saying, I was looking back on it the other day, and one of the things he brought up was that Doe's vision was to basically put them as an entity out of business. It should be completely community owned,
right,
completely away from everything. And I just remember coming back to that, and it's like, and then I think of what just happened here, and I think of just how much of a gap there is between full decentralization and decision-making processes. And you think of all the intricacies of what just happened here, and how complicated that is to deal with in a decentralized manner. It's pretty tough. It's pretty tough.
That's a great point. I mean, think about what Henry just said right there, where it was like all those like, the strategic decision making that went around the pool and jump stepping in and everything else. It actually came down to the delivery of like a PR message, right? Like they made the decision there, but it's like, how would a DAO protect against that, right? It's like, how are we going to make that? Someone's got to write that copy. Someone's got to go out there with that decision. Then you've got to have how many people approve it. And in a moment when they had to make decisions incredibly fast, it seems like a very centralized moment in time for something that you're right, John. I remember that, like talking about just like pure DAO, pure like governance, to have like, man, I'm talking to market makers that, I'm pretty sure they were like trading like corn and wheat at some point as well, right? Like we're talking about something. So I don't know. We're a little bit further away from where I think the industry wanted to be with at this point with some of this stuff.
Potentially. And I kind of look at it as potentially being showing how a decentralized organization could be more powerful, because in this moment, you had the Luna Foundation Guard, which was a centralized entity. And in that moment, when they needed capital markets expertise, they didn't have it. And they didn't have any other pool of experience that they could draw upon. Whereas like in a lot of DAOs, I think of something like Constitution DAO, last year, where in a matter of like a couple of weeks, like they were able to marshal tens of millions of dollars and put a bid where, Citadel actually did get us that time, didn't they? But nonetheless, the wider, basically like the ability to like drive passion and the permissionless nature of anyone to participate. You can basically say like Luna Foundation Guard could have if it was more of a DAO, it could have had like a Discord where it was like, hey, we're trying to figure out how to respond to this. Like, what are your ideas? What are your proposals? And like, who knows? Like maybe somebody who works at a hedge fund or like is an economist or even someone from the Fed, like themselves could have come in and just been like, hey, look, like, have you guys heard of forward guidance? Like we can really put together some really good forward guidance here. We have a lot of assets on our balance sheet that we can use to purchase UST out of the market. Like here is what, here's what a really good forward guidance statement looks like. Stuff like that, because like, and it totally could be someone from the Fed is the craziest part of it, right? Or it could be someone from the SEC. It could be someone from anything, right? Because it's in Discord, like you're just anonymous. You're just, an avatar. Anyone can participate, and things in crypto especially get so much traction so quickly in the media and, through social media. And so I don't think it's out of the realm of possibility for like a truly decentralized organization to say like, hey, really quick, we're going to work around the clock to fix this. Like we need experienced economists and financial regulators to like weigh in on this. And then of course,
or even prevent against some of the things like you guys were saying, like you saw that little DPEG and then suddenly it's like, well, maybe it's not the best time to rip and to like on a roadmap and rip this $250 million out of there. Right. And it's like, hey, then jumps 250 on top of that is on top of what's going on. And maybe none of this happens. A couple of small movements where it's like, hey, if they had even the controls that you guys had, they're not in the situation.
Right. And with a DAO, you would have more people watching and talking. Like the 250, the TVL that they pulled from that pool to put it into Pool, that as far as I can tell, it never went back into that pool. Like, did they just forget about that? Did they just like get overwhelmed and were like, oh my God, like somebody did that, forgot to tell anyone else, and they just didn't realize that they had $250 million of liquidity sitting out there? I don't know. But like, if you had a whole DAO of people, somebody could be like, hey, remember we've got this sitting out here, like, let's go put it back in the pool. I don't know. But DAOs can be very inefficient in ways as well, right? So I'm a little bit of an optimist. I'm the head of decentralized finance. What do you expect? Right?
Yeah, we are too. I mean, we're all in. We're on a cryptocurrency analytics company. We cheerlead everyone.
Yeah.
So like considering what's happened, do you think investors, there's a lot of discussion about it's almost like they're right to be made whole again. Is this part of just, hey, look, this is inherent risk in the space. What happens, it's on you. Or is there something that's maybe like more of a greater responsibility of Terra to at least make the smaller investors whole? I mean, now that's even part of the of Terra 2 here, where the smaller investors are sort of getting paid and the larger not. Like, what are your thoughts on that?
Yeah, I mean, so I think that anybody who operates in this space needs to be, aware of the risks and willing to take them. Like personally, when I invest, like I basically like strike that money from my own balance sheet, right? Like I just expect to never see it again. Sometimes that works out, sometimes it doesn't. But nonetheless, it certainly helps with the mentality of dealing with this volatility. And that is inherently a recognition of the risk of operating in this space. I mean, we are living through a Cambrian explosion of financial innovation that would be impossible anywhere else and has been impossible anywhere else. And with rapid innovation comes extreme risk. It's extreme risk. You do not get the potential for major rewards without risk. And I don't think that there's any other, financial asset class that exists right now with the same reward potential, upside potential as crypto and DeFi. But again, like that is more reward, more risk, So you have to be prepared for that. Now that said, I do think that, Doe and like I said, I think that Terra outgrew them and ran away from them. And I think that some of the statements that maybe he made or other individuals or entities made were not very transparent about the risks, which is, sort of a separate conversation from the fact that you should just recognize that there are risks. They spoke of UST as if it was more stable than it was. And, while the Luna Foundation Guard itself was a recognition of the fact that there was the potential for major instability in the peg, the narrative around it was like, we're making this the strongest stable coin in existence. And that obviously was not true and didn't turn out to be true. And I think while it's tough to say that there's legal liability, and that's certainly not something that I could weigh in on, I do think that there is some sort of moral responsibility for them to step in and not just, restart the chain with a new thing and say, hey, we're just starting over, but, contribute their own assets to making at least some of the smaller holders whole. I quite liked those proposals that were saying like, basically like 99.6% of wallets were like under 200K or something. And it would be like, I don't know, like $1 billion or something to make them all whole. I don't know if they have $1 billion, but like, even if you put in $500 million and made all of them, halfway whole or made them halfway, even that I think would do a lot to buy that confidence back, right? Like at the end of the day, any sort of a blockchain protocol, any sort of a decentralized application, it relies on confidence. You need market confidence. You need people to be confident that you will step up and do the right thing when shit hits the fan. And that would definitely be an indication of them being willing to step up and do the right thing.
So that right there, what you just said is such a huge point, like confidence.
Yeah.
Like, the thing that ultimately, and this is just my opinion, at least for now, I'm sure others feel the same, but it's like the impact on trust in this space has been absolutely like enormous from this.
Yeah.
Like, what should you trust? What shouldn't you? What makes sense for you? What doesn't? Like, there's a lot of questions. And it's like, it's interesting because like an hour ago, we just posted that there's, at least from a social perspective, there's more than 400% more people talking about crypto today than a year ago.
Mm-hmm.
Right? That's 400% people of like, that's all new people that haven't been here, and here this happens. And this is their first major taste of crypto.
Yeah.
Boom. Like trust is the contagious effect out of all of this. That's the biggest problem. It's not a financial thing. It's a trust thing.
Yeah.
And it's like, what are your thoughts? I mean, on the impact of all of this?
Oh man, I got a lot of thoughts here. So
I want to hear Joe's too.
What'd you say?
I want to hear Joe's thoughts on this one too.
Okay. Yeah. So, I mean, what was it like? P.T. Barnum said that, all press coverage is good. All PR is good PR.
Yeah.
I think the fact that people are talking about crypto in the first place is ultimately a good thing. Even if that initial experience is negative. I think the more people that get exposure to it, the better, because, even those people who maybe are looking at it and are like, wow, this sucked. There are several people who otherwise would not have seen crypto for like another 3 to 5 years. And they may recognize that, oh, wow, like this thing blew up, but there's actually promise with this other thing, or I heard about something else, or this is interesting, or let me dive deeper on that. So bad press doesn't really concern me that much with crypto, just because it's going to happen, right? Like that's just a natural impact of innovation. And my mental model for this actually comes from a book I read called Engines That Move Markets. And this book goes through and explores the creation and social and market adoption of every major technology for the past, I think it's like 300 years, right? So steamboats, railway, electric lights, radio, telephone, telegraph, computers, internet, cars, all of these things. And in every single case, bar none, there has been no major technology that's ever been invented that society did not reject. Every one of them. They all had to fight a massive societal backlash saying that shit is stupid. Why would anyone ever ride in a car when you can ride a horse, right? They're literally, and the beginning of every single chapter basically is filled with quotes from like luminaries and experts and established corporations of the time, newspapers, blah, 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 basically just panning this stuff. Like electricity is the most dangerous thing in the world. We're never going to use it. Light bulbs are a ridiculous fad that's, good for Americans, but no self-respecting British man will ever use a light bulb. Some crazy guy is down in the lobby saying that he can transmit his voice through the air, like call security and have him removed. The car is a fad. Bicycles are here to stay. It's just over and over and over again. Paul Krugman, right, in 2000 saying that, or no, 1998, saying that the internet is a fad. And within 5 years, the phrase information economy will be a joke, right? Like, always, it's always been like that. And so the backlash of society against innovation does not concern me in the slightest. Innovation is unstoppable. And innovation on a blockchain in particular is the most unstoppable form of innovation that has ever existed. So the more people I see being like, crypto's a scam, anybody who talks about Bitcoin is a grifter, I'm just like, sweet, dude. Like, that's just more time for me to buy and invest at incredible prices. Because 10, 15, 20 years from now, everybody is going to be using crypto and they might not even realize it.
Well said.
Here. Yeah, I mean, we talked about a little bit earlier, John, of like, I think the reason that people are having such a hard time with this industry or just understanding like the disruption is because, with like it's almost like with the car, I can get from A to B faster. It's like I understand how that works, right? So that's like a different experience for me, like as a human, is like seeing A to B faster, or like a light bulb, like you flip it on and now I can see at night and I couldn't see before. It's like it's almost like a very obvious like value that's out there. And that's why it's like it's a little bit like the internet, but with the internet, it was kind of like there was still all these like better outcomes and better experiences that happened. It's like with this space, you might not notice right away the difference in what's happening. It's like if I'm using Bank of America's app and I send money from me to you, I could still send it like pretty fast and kind of get the job done that I need to get done, right? With crypto though, it's saying, hey, like it's still going to kind of feel the exact same way. I press this button and it goes from me to you, but there aren't 100,000 people working at like, at Curve or, or at Aave, right? It's like, it's a community owned thing versus saying, hey, there's 100,000 people and, the tower we pay for in Manhattan's $1 billion, like, and we're subsidizing all those employees in those buildings. It's like, so, but it's like the retail person just doesn't, they're not seeing that. They're like, I'm just going about my life. Like I'm going to go work and then I'm going to come back. Like, why do I care if I press this button? Like, I don't necessarily know that that's affecting me. So that's why I think it's been so impactful for things when like COVID happened and people, the regular investor saying, well, what does happen when you print, $5 trillion? And like, okay, like now this, this gallon of gas is going to be a little bit more expensive because of these things. And people are, I think, waking up to this kind of centralized piece of it that they're like, I didn't opt into that. Right. So like crypto is kind of this opt out, but I just think a lot of folks are having such a hard time understanding that it's a disruption of every single thing and not just like, oh, you're going to rebuild this one thing on like, why am I investing in Phantom versus, like stacks or whatever it may be. It's like, well, these are just like internets that are competing, that you can purchase the internet for the first time in a way. So it's just like, it's kind of a thing that people don't understand. And so I don't know. It's like, I think it's a very difficult concept, but I think once people get over the hump, you see how passionate everyone is in the space, and they understand the disruption that's happening. And I think that's where we go back to the Bitcoin conference like a year and a half ago, where it's like, there was just like you'd see almost on like a college campus, where like you get a guy with a microphone, like kind of praising and like doing everything else. Like there was a guy there doing that for like Satoshi. Right. And we were just kind of joking, but we're like, man, 10,000 years from now, if Bitcoin's the thing, people are going to look back and like, oh, they didn't know who it was. Or it was a group of people. It was one people. There's this whole mythical thing. It's like, man, you could have Church of Satoshi, like, but like that passion there of like, sure, let it go down to 29K. Look at all the major wallets that are holding Bitcoin. Those people would rather you cut their arm off than take their Bitcoin. Name another asset class like that.
Yeah.
NFTs.
Exactly. Exactly. Those are going to zero, John.
True. Right. Pictures, JPEGs.
Yeah. Well, Henry, man, this was super fun. I don't know if you got any kind of last remarks on everything, or you've got a little prediction here for the next couple of months and what this thing's all going to adjust and change, and where we're going to be headed from here. But love to hear your thoughts on that. And man, really appreciate you being here.
Yeah, man. I mean, it's a dark world out there for sure, right? It's war in Europe. Seems like we're going into a recession. A lot of inflation. I kind of just bury myself in crypto in the meantime, because I just love everything that's happening. Even with, I take the ups with the downs, but the people in this space, they're just like, they're irreplaceable, right? Like you just meet the best people here, and they're so passionate and they're so smart and they're so open to just talking about everything and anything. And, the people I think drive the space, and you can't find better people.
Amazing. Well, Henry, appreciate it, man. Thank you so much for coming on. Everyone, this will be on all the podcast channels, and it'll be up probably on YouTube tomorrow. But thank you guys all for listening in. Henry, John, thank you guys. This was super fun. We'll chat with y'all backstage.